Carol, talk about what the average person needs to do right now or needs to think about right now to protect themselves from this coming inflation.
Okay, I will, but I have to say I want to jump through that screen and have some of that cake because
Oh,
it looks absolutely
you have to
amazing.
have. I grew up in a bakery. This is the greatest invention. It's cake it's not a cupcake, but it's cake in like a jar or a cup, and it is so unbelievably good. Anyway,
That's amazing. I appreciate the respect for
yeah,
not tempting me with
yeah.
that. So it's really important if you are a family and you do not have a budget that now is the time to make one. And you have to really look at your different expenses. If you have subscription services that you're not using, normally I'm able to
hmm
cut out a couple hundred of those a year.
Yeah, big
If
time.
you have a trip that you think that you might be taking, you really need to dial back because we don't know where this inflation is going. You don't want to put yourself in a situation where you don't have the money to pay for your typical goods and services, or even your heating bill. I mean, who knows what that's going to end up looking like for this month?
I mean,
Given the
that's really one of the reasons we just talked to a guest a little while ago. That's one of the reasons why the Prime Minister of England is on the verge of losing his gig. It's not just because of those parties. The cost of energy is crippling England, and it's happening all over the West. It's about to happen
yeah,
here.
Yes, and thank good we've traded our oil pipes for crack pipes. That really
Yeah,
helped us in the situation and the
right.
entire world. But yes, you're going to want to make a budget. You're going to want to see where you can cull back and save some money and put some away for emergency in case the inflation gets out of hand. The other thing that you want to do, and this is right out of the playbook that you outline in your book, The Great Reset, Glenn. The elites do not want you to own anything. They say you will own nothing and you will be happy. And so the way to combat that is to make sure that you own as much as possible. That means assets that are going to appreciate in value. So whether it's your own home, whether it's other home or land that you're able to rent out, whether it's building a business, whether it's stock options in somebody else's business, whether it's 401k matching from your employer to go out and continue to invest in high quality companies. That's what you want to do. You need to have ownership. And of course, if things go south, guns, ammunition, and seeds are always going to
hmm
have
Right.
bartering value.
And
But you want to have that tangible ownership because that's what creates wealth.
And I also, you said you want to put some money away. Um, we're not at this point yet, but we could quickly get there. To think like the Germans did, and they were accused of hoarding early on. Just don't tell anybody you're doing it. When you go to the grocery store, buy extra of everything and put it away because your money will continue to lose value in the bank,
Yes.
but the food price will continue to go up. So the money you're losing in inflation, you're actually gaining in everything that you have to use every single day. Buy those things now and store them.
Absolutely. I mean, especially the things that aren't perishable, the
Right.
perishable items, it's not as much of an issue for, but if you do have that long-term ability to store each day, your dollar's worth less and less. So it makes a lot of sense.
Okay, Carol, can you hold on for I'm sorry to hold you over one more time, but I do want you to talk about your bank's ESG score and
Yes.
activity, how you find that, and, where do you go from there? We're talking to Carol Roth. Carol, BlackRock, a company that most people a year ago had no idea it even existed. Now, more and more people know about it, and it is trending on Twitter today. This is a company that has just absorbed Barclays, JP Morgan. I mean, this is the powerhouse of hedge funds now and really setting the pace for all of this horrible, wicked stuff that is happening with ESG, et cetera. They're trending today. Is it because of their stance on crypto that is making them trend?
Yeah, so BlackRock, it's interesting. One of the biggest, most powerful companies in the world. They are the biggest asset manager. They have around 10 trillion in assets under management, per their last report. And they have, well, they haven't announced, but it has been announced, and they're sort of shuffling around on whether it's true or not, that they are going to be getting into the crypto trading business. So they have an online platform, and they're going to allow their institutional clients to trade crypto, and it sounds like potentially use it for lending. It was unclear on whether their clients will be able
Oh,
to pledge crypto as collateral, or whether they would be able to get a loan to buy crypto, or maybe both. But that's what's got Twitter abuzz
okay.
this
So
morning.
here's the problem. They are involved with every central bank in the West. I mean,
Right.
they have $20 trillion of just central bank money that they control and invest. They are now investing for the Federal Reserve. The Federal Reserve, the Treasury, they have two heads of their company, former heads of their company, in with the Treasury. Another one is an advisor for the president, the chief economic advisor. The other one is the chief economic advisor for the vice president. So they're everywhere. The government is currently, and the Treasury, going after cryptocurrency. How does this make sense?
There's sort of the simple answer, and then there's sort of the hypothetical answer. The simple answer is money. That they're institutional clients, and they have, as I said, the most assets under management in the world. If the institutional clients are demanding it, they don't want to risk those clients going elsewhere.
Mm.
So if that they want to be part of the money play, but I think that there's also something else going on, and whether it's the government going after cryptocurrency, whether it's potentially creating a digital dollar instead of an open source crypto currency. If you are BlackRock right now, you are on the outside of crypto looking in. But if you all of a sudden become a significant player, what does that give you? That gives you access to information. And information is power, and
Jeez.
information is money. And so they will have that really bird's eye view of what's happening, what the demand is, who's trading it, how it's being traded. And that could be very instrumental in potentially helping to shape policy. So that would be, again, I have no knowledge of
Yeah,
this.
yeah,
This
yeah. I
is just,
know.
Carol sort of going through the
Riffing.
strategic, yeah, the
Yeah,
strategic rumblings, and thinking that,
sure.
if I were interested in weighing in on this, I would certainly want to have better access to information. And what better access to information than if I control that information?
We're talking to Carol Roth, former investment banker. She calls herself a recovering investment banker, and she cares deeply about our country and Main Street and the regular person, and trying to get the word out on what is coming. And I so appreciate you, Carol. I have been giving the advice: get to a savings and loan, or get to a local bank that keeps their loans local and invests in the local community. Get away from anything ESG. A lot of people are, writing to me and going, Glenn, I mean, I don't know what I'm even looking for. I don't know how to judge these banks. Can you help?
Absolutely. Well, definitely everybody has a different financial profile. So you need to make the decisions that are best for you based on your goals, objectives, risk, all those kinds of things. But I also have been getting, since talking to you and the fact that you're highlighting this in your book, The Great Reset, a lot of inquiries from people saying, I'm interested in staying away from these financial institutions that are very heavy into ESG. I don't know how to research it. So I wrote a piece for The Blaze. And what you have to understand is that there are a handful of institutions and individuals who are driving this, and there are a whole bunch of others that are sort of jumping on the bandwagon and really have no idea what it means either, but they want a virtue signal about it. If this is something that is important to a company, they are going to advertise it because they think they're the good guys. They think that they are doing the right thing, and they think that you care about this in the opposite way that you probably care about this. So the best thing to do is to take a look first at their website to see if they have any mentions of ESG or other words that are like ESG, things like socially responsible investing or
Hmm.
sustainable investing, that becomes a clue. But a lot of companies don't update their websites that often. So you're also going to want to do a quick internet search, look at press releases and look at articles. And again, don't jump to conclusions, but use this to help to inform you how serious do they seem about it. You can check their social media accounts. Is this something that they're putting out on Twitter or Instagram or Facebook? Again, if it's really important to them, those are the kinds of places they're going to want to be showing it off that they're a quote unquote great citizen. And then you can also ask for their own financial institution annual report. You can ask if they have an ESG report, and you can ask their representatives, is this something that's important to you as an organization? And if it hasn't made it down to the representatives, again, to say, oh, yes, this is something that's important, it doesn't guarantee that it's not floating around somewhere, but you know that it's not an important tenant. And frankly, I would
I will.
advise people.
I
Go
hang
ahead.
on just a sec. I will tell you that we had, and I won't mention the bank, one of the big banks that is a driver of this, tell us a year ago, no, it's nothing. It's none of that. Really? So, I mean, that's at the highest level. Said we don't. Yes, we have it on our website. I mean, there's also a lot of smoke and mirrors. So you really have to. You just have to use your gut on this.
Absolutely. And what I would say is we need to use our voices and make it known, because again, corporations tend to run in risk cycles. They think this is something that people are interested in. Most of them have no idea what it even means. And so if they hear from more people they don't want it, that is going to impact their
Correct.
decision making. So if you leave for this reason, if you're comfortable to put your name on it, great. If not, do it anonymously or do it as part of a group. But you should be writing to banks and say, I pulled my money because I don't believe in this. I believe you should be focused on financial centric decisions, and all of this other stuff is nonsense.
Hmm.
So the more feedback that you can give, I think the better chance we have to stop it, because the virtue signaling only goes so far. But at the end of the day, if it starts to impact profits, that's going to change things pretty substantially.
Yeah, and I would tweet your letter. I would tweet your information, and I would come up with a hashtag, whatever the bank is, ESG. And so people can follow it and others can join. That will make them uncomfortable. And if they're not dedicated to it, you're right, they will begin to fold.
And I
How?
would even add, do hashtag no ESG, because if they
Yes,
think that it's just ESG, they may think that you're actually pro it, and you'll get a conflation of people who are.
got
But
it.
but make it super clear, no ESG.
Got it. Anything to say about how you pick a bank or a credit union? Credit union, the best place to put your money now?
I mean, again, it's very dependent on the individual. I mean, the great thing about a credit union is that you are not just a customer, but when you take on an account, you become a member. So you actually get a vote and a say on the direction of the business, and that can be very important. The trade-off when you go to an institution like that is that it may have a less robust technical interface, or it may have fewer products and services. So you have to marry, what do you need to manage your finances with your key values, and find that right fit for you. The most important thing, if you're looking at whether it's a local financial institution, a credit union, is just to make sure that you do have that insurance, and most of them do. A credit union is insured by a different group than FDIC. It's a Credit Union Administration, the NCUA, and they have the same limits. It's, I think, about $250,000 per account. So you want to make sure that you count that you have the high class problem, that it doesn't go over
Right.
that limit. But you want to make sure that they're
Do
insured, and then you can look into their history to make sure that they don't have a large amount of loans that are in default, because that's sort of a key indicator of a bank that could potentially have problems, or
so
financial institution that could have problems.
I know with the new law after the '08 crash, they changed it so the depositor is the last in the line to get their money. Okay, the bank can use those deposits to pay everybody else off, and you're the last in line because the government covers it.
Right.
Is that true with credit unions like banks? Do you know?
I don't have sort of the ins and outs of that, but the less complex the financial institution, the less you have to worry about sort of those
Right.
lines, right? If they're not doing crazy things like derivatives and crazy
Correct.
loans and whatnot, the more simple and straightforward, the higher up in the pecking order you're going to end up being. But the most important thing is that that money is insured by the government, at least for the time being, that still has, some modicum of help and should give you some comfort.
The time you expect interest rates to start to move.
So there is a March meeting that's coming up, and I think for the Fed to keep credibility, they probably have to do the first rate hike then. There is a discussion on whether that is a quarter of a basis point or half a basis point, or 25 basis points or 50 basis points, which is a quarter of a percent or half a percent. I think likely 25 basis points, but it could be as much as 50. And then we'll have to look at their language to see how they're going to telegraph it for the rest of the year. I mean, some people on Wall Street at this point are expecting maybe up to 6 hikes this year, which
Jeez.
will really throw the stock market and potentially the economy into jitters. I personally think they're between a rock and a hard place because they don't want the interest rates to rise because of the interest that we have to pay on our $30 trillion of national debt. I think they're going to do everything in their power to maintain that credibility of doing something, but doing the least amount possible. So I'm more in the camp of maybe 3.
If we have 5% interest rate, how much of our federal budget goes to paying for that $30 trillion every month?
So it's probably out of every dollar that you give the government, about 30 cents of every dollar will go to servicing interest if we get back to a normalized interest rate of 5%, which is the whole reason, by the way, Glenn, why they have depressed interest rates to this,
Correct.
zero level for so long, because
Correct.
they're running cover for the government.
Carol, thank you so much for all of your work and her article on banks. And she's written a couple of articles and going to be writing a lot more for Blaze.com. How to research your bank's ESG activity, theblaze.com. Her name is Carol Roth. You can find her at carolroth.com. You can also find her book, The War on Small Business, wherever books are sold. Thank you, Carol. Appreciate it.
Happy birthday.
Yeah, thank you very much.